Hey, everyone! Welcome back to the channel. Today, we're diving into a book that's a must-read for anyone serious about real estate investing, What Every Real Estate Investor Needs to Know About Cash Flow by Frank Gallinelli. If you've ever felt overwhelmed by the financial side of real estate or wondered how to evaluate a property's potential, this book is for you. Frank Gallinelli, a real estate expert and educator, breaks down the essential financial metrics and calculations that every investor needs to know to make smart, profitable decisions. This isn't just a book about theory. It's a practical guide filled with real-world examples, formulas, and strategies to help you analyze cash flow, assess risk, and maximize returns. Whether you're a beginner or a seasoned investor, this book will give you the tools to confidently evaluate properties and build lasting wealth through real estate. So, grab a notebook, sit back, and let's explore the key ideas, lessons, and takeaways from this invaluable book. Overview of the book. What Every Real Estate Investor Needs to Know About Cash Flow is a comprehensive guide to understanding the financial side of real estate investing. The book is divided into three main sections. 1. The Basics of Real Estate Investing. Gallinelli introduces the fundamental concepts of real estate investing, including cash flow, appreciation, and leverage. 2. Key Financial Metrics. Gallinelli provides a detailed explanation of the key financial metrics used to evaluate real estate investments, including net operating income, NOI, capitalization rate, cap rate, cash-on-cash return, and internal rate of return, IRR. 3. Advanced Topics. Gallinelli delves into more advanced topics, such as financing, risk analysis, and tax considerations, to help investors make informed decisions. Through a mix of clear explanations, practical examples, and step-by-step calculations, Gallinelli provides a roadmap for mastering the numbers and building wealth through real estate. Key themes and lessons. Let's break down the core lessons and themes from What Every Real Estate Investor Needs to Know About Cash Flow. These are the ideas that have made this book a go-to resource for real estate investors. 1. The importance of cash flow. One of the central themes of the book is the importance of cash flow in real estate investing. Gallinelli explains that cash flow is the lifeblood of any real estate investment and that understanding how to calculate and analyze it is essential for making smart investment decisions. Example: Gallinelli uses the example of a rental property to illustrate the concept of cash flow. He explains that cash flow is the amount of money left over after all expenses, such as mortgage payments, property taxes, insurance, and maintenance, have been paid. Positive cash flow means the property is generating income, while negative cash flow means the property is costing you money. The takeaway: cash flow is the foundation of real estate investing. Always analyze a property's cash flow potential before making an investment decision. 2. Net operating income, NOI. Gallinelli introduces the concept of net operating income, NOI, which is a key metric for evaluating the profitability of a property. NOI is calculated by subtracting operating expenses from the property's gross income. Example: Gallinelli provides a step-by-step example of how to calculate NOI. Suppose a property generates $120,000 in annual rental income and does $120,000 in annual rental income and does $40,000 in operating expenses, property taxes, insurance, maintenance, etc. The NOI would be $80,000, $120,000, $40,000. The lesson: NOI is a critical metric for assessing a property's profitability. It provides a clear picture of how much income the property is generating after expenses. 3. Capitalization rate, cap rate. Gallinelli explains the capitalization rate, cap rate, which is used to estimate the potential return on an investment property. The cap rate is calculated by dividing the NOI by the property's purchase price. Example: using the previous example, if the property's purchase price is $1,000,000, the cap rate will be $81,000, the cap rate will be $880,000 NOI/$1 million purchase price. A higher cap rate indicates a higher potential return, but it may also indicate higher risk. The takeaway: the cap rate is a useful tool for comparing the potential returns of different properties. However, it should be used in conjunction with other metrics to get a complete picture of the investment. 4. Cash-on-cash return. Gallinelli introduces the concept of cash-on-cash return, which measures the annual return on the actual cash invested in the property. It is calculated by dividing the annual pre-tax cash flow by the total cash invested. Example, suppose you purchase a property for $1,000,000 with a $1,000,000 with a $200,000 down payment and $800,000 in financing. If the property generates $800,000 in financing, if the property generates $20,000 in annual pre-tax cash flow, the cash-on-cash return would be 10%, $20,000/$20,000/200,000. The lesson: cash-on-cash return is a valuable metric for assessing the return on your actual cash investment. It helps you understand how much income you're generating relative to the amount of cash you've put into the property. 5. Internal rate of return, IRR. Gallinelli explains the internal rate of return, IRR, which is a more comprehensive measure of an investment's profitability. The IRR takes into account the time value of money and provides a single rate of return that summarizes the investment's performance over time. Example, Gallinelli provides a detailed example of how to calculate IRR using a series of cash flows over several years. He explains that while IRR can be complex to calculate manually, it is a powerful tool for evaluating the overall profitability of an investment. The takeaway: IRR is a more advanced metric that provides a comprehensive view of an investment's profitability. It is particularly useful for evaluating investments with irregular cash flows or long holding periods. 6. The role of leverage. Gallinelli discusses the importance of leverage in real estate investing. Leverage refers to the use of borrowed capital to increase the potential return on an investment. While leverage can amplify returns, it also increases risk. Example, Gallinelli uses the example of purchasing a property with a 20% down payment and 80% financing. If the property appreciates in value, the return on the investor's equity can be significantly higher than if the property were purchased with cash. However, if the property's value decreases, the investor's losses are also magnified. The lesson: leverage can be a powerful tool for increasing returns, but it also increases risk. Always consider the potential risks and rewards of using leverage in your investments. 7. Risk analysis. Gallinelli emphasizes the importance of risk analysis in real estate investing. He explains that every investment carries some level of risk, and it's essential to understand and manage that risk. Example, Gallinelli provides a framework for analyzing risk, including factors such as market conditions, property location, tenant quality, and financing terms. He also discusses the importance of conducting thorough due diligence and having contingency plans in place. The takeaway: risk analysis is a critical part of real estate investing. Always assess the potential risks of an investment and have a plan for managing those risks. 8. Tax considerations. Gallinelli discusses the tax considerations of real estate investing, including deductions, depreciation, and capital gains taxes. He explains that understanding the tax implications of your investments can help you maximize your after-tax returns. Example, Gallinelli explains how depreciation can be used to offset rental income and reduce your taxable income. He also discusses the benefits of 1031 exchanges, which allow investors to defer capital gains taxes by reinvesting the proceeds from the sale of a property into a new property. The lesson: tax considerations are an important part of real estate investing. By understanding the tax implications of your investments, you can maximize your after-tax returns and build wealth more effectively. 9. The importance of due diligence. Gallinelli stresses the importance of due diligence in real estate investing. He explains that thorough due diligence is essential for identifying potential issues and making informed investment decisions. Example, Gallinelli provides a checklist for conducting due diligence, including reviewing financial statements, inspecting the property, and researching the local market. He also emphasizes the importance of verifying all information and seeking professional advice when necessary. The takeaway: due diligence is a critical step in the investment process. Always conduct thorough due diligence to identify potential issues and make informed decisions. 10. The mindset of a successful investor. Gallinelli discusses the mindset of a successful investor, emphasizing the importance of discipline, patience, and continuous learning. He explains that successful investors are always looking for ways to improve their knowledge and skills. Example: Gallinelli shares stories of successful investors who have built wealth through real estate by staying disciplined, being patient, and continuously learning. He also emphasizes the importance of staying focused on long-term goals and not being swayed by short-term market fluctuations. The lesson: the mindset of a successful investor is just as important as the technical skills. Stay disciplined, be patient, and continuously seek to improve your knowledge and skills. Actionable takeaways. Now that we've covered the key lessons, let's talk about how you can apply these principles in your own real estate investments. Here are some actionable steps inspired by what every real estate investor needs to know about cash flow. 1. Analyze cash flow. Always analyze a property's cash flow potential before making an investment decision. Calculate the NOI and ensure the property generates positive cash flow. 2. Calculate key metrics. Use key financial metrics like cap rate, cash-on-cash return, and IRR to evaluate the potential returns of a property. 3. Understand leverage. Consider the potential risks and rewards of using leverage in your investments. Use leverage wisely to amplify returns while managing risk. 4. Conduct risk analysis. Assess the potential risks of an investment and have a plan for managing those risks. Conduct thorough due diligence and have contingency plans in place. 5. Consider tax implications. Understand the tax implications of your investments and take advantage of tax benefits like depreciation and 1031 exchanges. 6. Perform due diligence. Always conduct thorough due diligence before making an investment. Review financial statements, inspect the property, and research the local market. 7. Stay disciplined. Stay disciplined and focused on your long-term goals. Don't be swayed by short-term market fluctuations or emotional decisions. 8. Continuously learn. Continuously seek to improve your knowledge and skills. Stay informed about market trends, new investment strategies, and changes in the tax code. 9. Seek professional advice. Work with knowledgeable professionals, such as real estate agents, CPAs, and attorneys, to help you make informed investment decisions. 10. Build a network. Build a network of other real estate investors, mentors, and professionals who can provide support, advice, and opportunities. Criticisms and controversies. While what every real estate investor needs to know about cash flow has been widely praised for its practical advice and clear explanations, it's not without its critics. Some argue that the book is too focused on the financial side of real estate and doesn't provide enough guidance on other important aspects, such as property management and tenant relations. Others believe that the book's emphasis on financial metrics may lead investors to overlook the importance of qualitative factors, such as location and market conditions. However, the book's strength lies in its ability to provide a clear, actionable roadmap for mastering the financial side of real estate investing. Even if not every aspect of real estate investing is covered, the principles of understanding cash flow and financial metrics are essential for making informed investment decisions. Conclusion: what every real estate investor needs to know about cash flow is a must-read for anyone serious about real estate investing. Frank Gallinelli's clear explanations, practical examples, and step-by-step calculations make this book an invaluable resource for evaluating properties, assessing risk, and maximizing returns. Whether you're a beginner or a seasoned investor, this book will give you the tools to confidently analyze cash flow and build lasting wealth through real estate. If you found this summary helpful, don't forget to give this video a thumbs up and subscribe to the channel for more book summaries and personal finance tips. Let me know in the comments what your biggest takeaway from what every real estate investor needs to know about cash flow is, or if there's another book you'd like me to cover next. Thanks for watching, and I'll see you in the next video.